श्री भर्तृहरि मेहताब। ये बोलने का था।
Chairman sir, it's a different day, different time, but you are there in the chair, and I'm also going to deliberate on a bill. The bills are different. That was a finance bill, and this is a GST bill.
And you are the first speaker from your party today.
I think I am the only speaker from my
Acha, okay.
First and last. 4 bills in one go. The Central Goods and Service Tax Bill 2017, the Integrated GST Bill, the Union Territory GST Bill, the GST Compensation to the States Bill 2017, or the Compensation Bill as it is called. All these bills have been approved by the GST Council, which discussed over 12 meetings during last 6 months, the details of which was told to us by the Finance Minister. People are saying that GST will be a game changer and will bring immense benefit to manufacturers, traders, exporters, and others, but we believe, Biju Janata Dal, on this side, that it will be illusory to expect too much from it. There is a need to guard against over-expectation. Much depends on the GST law and the administrative structure about which Kalyan Babu just now mentioned. The basic advantage that comes from an amalgamation of nearly 1.5 dozen central and state taxes. So the gains especially will be, this amalgamation will remove the difficulty of paying so many taxes separately, common market in the absence of CST and entry tax. Number 3 would be no entry tax, which means no waiting at the border and quicker movement of goods. Invoicing will be simpler. Big central excise tariff will go. Concept of manufacture, which is the most litigant issue in different courts, that will also go. Zero rating will be more comprehensive in GST. For traders, it will be advantage as interstate trade will be cheaper than CST. But yet again, I will like to remind this House, do not expect too much from GST, because it all depends on the revenue neutral rate that is fixed. It is now fixed at 0%, 5%, 12%, 18%, and 28% and above. It will be known only after the first year whether it is revenue neutral or not. It is very uncertain whether revenue will grow after the first year, even if a proper revenue neutral rate is fixed. The claim that the consumer will benefit due to less tax burden is also very illusory. It depends on whether the total tax collection is the same as last year, allowing for yearly growth. 2 दिन पहले एक वर्कशॉप स्पीकर्स रिसर्च इनिशिएटिव के तरफ से हो रहा था. हमारे मेंबर की जो मानसिकता है वो बार बार वही पूछते रहे, दाम कमेगा कि नहीं, घटेगा कि नहीं, will the prices come down after implementation of this law? That is the basic thing which our people want to know. Therefore, the expectation that has been created because of GST, one nation, one tax, one product, the expectation has grown to the level of the sky. But let there be little bit of caution. It is illusory. After 1 year, we will come to know actually what is going to be the impact. And it depends on many, many things. With 5 rates of duty, namely 0%, 5%, 12%, 18%, 28%, there will be quite a number of classification. Controversies between 12% and 18%, just the finance minister touched between that. Our suggestion is if these two rates could be combined into one rate of 16%, all controversies would be practically over. This was discussed, deliberated in the council, but a decision was not arrived at. There was a concern expressed by different stakeholders, but the government and the council has not accepted. Distinction between goods and services will not go, since a separate rate for service tax is also being introduced. Inflation will also depend on whether the total tax collection is much higher than the normal expectation. VAT, GST does not have any particular impact on inflation, which is proved by case studies in different other countries who have accepted VAT, had accepted VAT, and later on they accepted GST. I would also like to draw the attention towards clause 1712. Very faintly, Mr. Moily touched about it. 171, clause 171, subsection 2. It deals with, sir, the central government may, on recommendation of the council by notification, constitute an authority or empower existing authority constituted under any law for the time being in force. And this is for anti-profiteering measure. We have a competition law in the country. And here, why do you have a provision in this bill which empowers the government to constitute an anti-profiteering authority? I fail to understand. This is a very retrograde step. The Competition Act of 2002 provides for action against abuse of dominant position. No other anti-profiteering law is necessary. Will this be beneficial for ease of doing business? I fail to understand. On GST compensation bill, sir, I have moved 2 amendments. And these are our concern, our state's concern. I'm not privy to what happened inside the council, but these are our concerns. And this Odisha participated, as Kalyan Babu just now mentioned, in the GST council meetings for drafting of GST law. The draft compensation law envisages 2015-16 will be the base year. And this is a subject which we had deliberated earlier, because the previous government of UPA, after making a commitment inside this house, had gone back on compensation. And that's why repeatedly during our final budget speech, we used to always ask from the government, of the then government, that why you are not providing compensation after we have reduced the CST. But this government, the council, has come to this house with this bill. But there are certain concerns. 15-16 is the base year. 14% year-on-year growth will be applicable for the base year to arrive at projected revenue for 1 year, for any year. Compensation to any state will be calculated by deducting the actual revenue from projected revenue, if the actual revenue is less than the projected revenue. And compensation will be available for 5 years from the GST compensation fund. Thus far, well and good. But we have an entry tax. We have an entry tax. And there is a little bit of concern. In that council of 29 plus 2 plus 1 members, perhaps Odisha's case was not considered in full detail. Entry tax के लिए Odisha brought to the notice of the GST Council the issue relating to entry tax, which will impact the amount of compensation. The dealers in Odisha had challenged the validity of Odisha Entry Tax Act 1999 in Honorable Supreme Court. In pursuance to interim orders of Honorable Supreme Court and High Court of Odisha, starting from 2009 onwards, dealers have been paying only 50% of entry tax due on imported goods brought from outside the state, which are not manufactured in Odisha. As a result, we have been restrained to collect the full amount that entry tax is, that amounts to the entry tax. So in this context, it was stated by Odisha, by our finance minister,
Full amount has to be taken.
in the GST Council meeting that if state wins the case, a substantial amount of revenue in the form of entry tax of past years, including that of the financial year 15-16, would flow to the state.
Correct.
Therefore, it was proposed by Odisha that such revenue on account of the year 2015-16 should either be included in the base year of 15-16 calculation, or it should be excluded from calculating the actual revenue for the concerned subsequent year or years. Otherwise, the amount of compensation will be unfairly reduced. However, this proposal was not accepted in the GST Council on the ground that such court orders in different cases for different states will keep arising, and the principle of compensation cannot be made subject to the result of such cases. न्याय नहीं हुआ. And however, Odisha had indicated that the entry tax case was a special case where a number of states were also involved, and the constitutional validity of entry tax acts were put to question. The dealers had got special concession of the courts pending the determination of constitutional validity of the Entry Tax Act.
Supreme Court have now referred to the concerned High Court few days back.
In the meantime, a 9-judge constitutional bench headed by Honorable Chief Justice of Supreme Court of India, in its order dated 11th November 2016, civil appeal, I'm quoting this, 3453/2002, in the case of Jindal Stainless Limited and others, versus State of Haryana and others, has passed an order about which Kalyan Babu was just now mentioning, which goes into the state's favor. Consequent upon the judgment of Honorable Supreme Court, collection of balance entry tax from the dealers, which they had kept with themselves based on interim orders in the near future, is expected.
Yes.
But are you going to calculate that?
That is.
Whether council has rejected. And therefore, I would appeal to the finance minister, take up this case on our behalf in the council. Our finance minister's appeal was rejected, was not considered in the council. Odisha will get a substantial balance of entry tax relating to the financial year 2015-16. Another issue, when the GST constitution amendment was being moved, we had also moved an amendment relating to the clean environment cess. And that time, the finance minister had assured us, this will be decided in the council, and we will take up that case. What has happened? Odisha had also raised this in the council. Odisha is a coal-bearing state. A cess is being collected. In the third council meeting, this was raised. I know that. I know that. I know that. Please have patience to hear me. The rate of royalty on coal, fixed at 14% ad valorem, has not been revised for more than 4 years, even though the Ministry of Coal has constituted a study group to consider revision of rates royalty on coal on 21st July 2014. We are in 2017. While the rate of royalty has remained unrevised, the central government, the union government, had enhanced the levy of clean environment cess to 400 rupees per ton in the union budget in 2016-17. This cess is not shared with the coal-bearing states, nor did the coal-bearing states get any benefit from the funds collected as cess in proportion of their contribution to the cess. It had been suggested by our state that this cess should be renamed as Environment and Rehabilitation Cess, and at least 60% of such funds should be shared with the coal-bearing states to deal with negative externalities. The remaining 40% of the cess may go to the GST compensation fund. Instead of distributing, Jharkhand will be benefited. Instead of distributing it throughout the country to all the states, it is the coal-bearing state which should get the benefit, at least for 60%. That 40% be distributed among other states. However,
No, please sit down.
However, GST Council
Nishkantji, please sit down.
has decided that the entire proceeds of Clean Environment Set would be used for GST compensation. And that is our concern. That is our concern. Sir, there is a IRS association, and it has drawn the attention of this government, which is of concern and needs clarification. In our parliamentary system of governance, the issue of parliamentary oversight is a must, but it has not been addressed. IGST assessment errors by state government officers would go outside the oversight of C&AG and Public Accounts Committee. C&AG and the PSC submit reports to the Parliament, to which the CBEC, now it is going to be called CBIC, CBEC tax administration is answerable. However, such oversight collapses once the paper under IGST is delegated to the states. This grant of power is without any accountability. This is constitutionally not permissible. Another concern, sir, has been raised is that there would be multiple registration for service providers, which goes against the idea of one nation, one tax. In the proposed administrative architecture, they will have to take around 30 separate registration, thereby making them face 30 different tax administrators. Multiple return of service providers and banking sectors will increase compliance cost. Service providers in the banking, insurance, logistics, IT and ITES, and aviation sectors are operating under single centralized registration of service tax at present. That means at present they have to file 3 service returns in 1 year. In GST era, they will have to file 61 returns per state per year after taking registration in each state in which they have presence. No doubt, State Bank of India, which has branches in 35 states and union territories, will end up filing over 2,000 returns annually. This does not seem to be in the spirit of ease of doing business. I would like to understand this, the last point which I would like to mention, sir. I would like to understand this business of defining agriculture in the GST bill. Clause 2, subsection 7, in page 2. Agriculturist means an individual or a Hindu undivided family who undertakes cultivation of land, A, by own labor, B, by the labor of family, and C, by servants on wages payable in cash or kind, or by hired labor under personal supervision or the personal supervision of any member of the family. West Bengal has a Tenancy Act. You have a Sharecropper Act. You provide, and now the owner of the land will be taxed and become under GST. I don't know what happened in the council. But here is a case, in a roundabout way, you are bringing agriculture to the tax. Agriculturist to the tax. I missed it.
Was a 2014 amendment, was actually a 1973 amendment.
Corrected, sir. आप मेरे से विद्वान हैं, इंटेलिजेंट है, आप मुझे अगले दिन रिमाइंड कर दिया था कि ये टाइम इमेमोरियल से है, but 1973 is the right thing, and I was coming to that. But agriculture is being taxed. Can we deny it? It is being calculated with our other source of income. Now the slab goes up, so indirectly, I have to pay more tax. And here also, here in this GST, it was never considered, I had never conceived. States like Odisha, Andhra Pradesh, Punjab, Haryana, Delhi, I don't know why, West Bengal has not objected to it. But 4 states specifically had objected to this provision and had wanted certain corrections to be made. But that was not accepted in the council. I would conclude by saying, on this point I would conclude, sir. Please bear with me.
Please conclude.
Please bear with me. What exclusion is there is left to the intelligence of the people. The provisions of this explanation, what has been given here in the definition, who is an agriculturist? A person who does agriculture, cultivation by his own labor, by labor of his family, by servants on wages payable in cash or kind, or by hired labor under personal supervision, or the personal supervision of any member of the family. And family's definition is there in the law. But what exclusion is there is left to the intelligence of the people. But this exclusion of the definition for the purpose of taxation and the exclusion point 2 things. One, sharecropping is now going to be taxed by this bill. Even if tenant right over a portion of produce as wages or give them bonus in the form of wages is a natural practice in our country. Yet this government wants to include it in the tax net through this bill. Widening the tax net is one thing. Bringing agriculturists and imposing tax to which Punjab had objected very vehemently. It was not accepted. Haryana, where the BJP has a government of its own.
Punjab at that time, BJP government was...
BJP and Akalis were, and they will face the music now. This is highly objectionable.
Now, please
Secondly,
conclude.
sir, items like dairy farming, poultry, have not been included in the definition of agriculture. In the absence of formal exemption list, the taxman, that is our concern, the taxman can argue these items are not in the list, hence taxable. The farmers' body have raised their concern with the finance ministry and agriculture ministry. This needs to be addressed. Despite objections from states like Punjab and Haryana and other states, the council and this government have refused to address this issue. Sir, Punjab's suggestion to add a subclause for inclusion agriculture cooperation through any usufructuary, mortgage or lease or otherwise, and include cooperative societies within the meaning of agriculturist, it was not accepted. However, then Telangana suggested that the definition should not be limited to those who cultivate the land personally as small landholders, marginal farmers. They also pull in land from different farmers and do that. That was the suggestion from Telangana. That was also not accepted. Haryana said no restriction should be put and even contract farming should be allowed since land holdings are very small. That was also not accepted. Delhi claimed tenancy was quite common in India and to make them taxable under GST would be a very big decision which needed to be discussed. But it was only and only Gujarat. Chairman, sir, it was only Gujarat which stated that a company that entered into a tenancy agreement should be registered and pay GST. We have no objection to that. But the land law of West Bengal, of Odisha, of Bihar, of Jharkhand of Punjab, of Haryana, and the farmers, are you going to bring them under GST and expand your tax net? And when the finance minister stands up and
Please
says,
conclude now.
stands up and say, this is a unique thing in the council, and every state has unanimously agreed. Here are certain states who have objected and it was not accepted. And whose state sits in that? I'm not going to challenge the decision or the wisdom of the council now, but it will be challenged at some point of time earlier, unless a consensus is built up. Because the large section of our society are going to get affected when you are defining agriculturists and you are bringing them under GST.
Okay, thank you. Anandrav Adsu.